Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of April 29th to May 3rd, 2024. Let's dive into what to expect in the upcoming week. As we navigate through a period of significant economic recalibration, central banks worldwide exhibit a spectrum of stances towards monetary policy adjustments. The Federal Reserve's recent minutes signal a cautious approach, delaying rate cuts amidst fluctuating economic indicators. This prudence mirrors broader market sentiments, where optimism persists despite uncertainties. Economic data have been surpassing expectations, but manufacturing has seen persistent contraction, with the ISM index staying below 50 for 16 months. March showed a slight improvement, pushing the index to 50.3. However, this marginal recovery isn't as robust as the growth in services. Industrial production has been inconsistent, showing no substantial growth over the last year and a half. Ahead of the FOMC meeting, the ISM report will be closely watched to gauge if manufacturing is regaining stability. The FOMC held rates steady in March but signaled potential rate cuts later in the year, a stance reinforced by the Summary of Economic Projections (SEP). These projections and statements were labeled data-dependent, and subsequent data have not bolstered the case for rate reductions. Inflation's downward trend has been interrupted in recent months, with the latest PCE deflator update indicating a 2.7% increase over the past year. Persistent strength, especially in the service sector, suggests to policymakers that now may not be the time to relax monetary policy. Contrary to expectations of a slowdown, the U.S. labor market has gained traction this year. In Q1 2024, an average of 276,000 jobs were created each month, a significant increase from the 212,000 monthly average in the last quarter of the previous year. This consistent hiring surge has maintained the unemployment rate below 4.0% for an unprecedented 26 months in a row, a record that surpasses the combined total of sub-4% months over the past 50 years. Despite the robust job market, some weaknesses are emerging, like the downward trend in job postings, small businesses showing less interest in hiring, and sporadic news of layoffs. However, resilient consumer spending and strong economic performance should continue to bolster job growth. We expect the addition of another 250,000 jobs in April, with the unemployment rate holding steady at 3.8%, marking the 27th consecutive month of sub-4% unemployment. Upcoming preliminary GDP figures for Q1 and April CPI, scheduled for release on Tuesday, are poised to influence market forecasts for 2024. However, any significant shifts in June's economic projections are improbable, barring substantial deviations from current predictions. The euro area's economy is estimated to have grown by 0.2% quarter-on-quarter in the early part of the year, following a stagnant Q4. An uptick in economic performance might reduce the need for the European Central Bank to implement aggressive rate cuts, with policymakers requiring additional decreases in inflation to sustain a dovish approach. Inflation rates are anticipated to remain steady at 2.4% for March. China is experiencing a revival in its economic activities. The official Composite Purchasing Managers Index (PMI) reached its peak since May 2023 this March, with the surge primarily fueled by the services sector, while the manufacturing sector's rebound continues at a lukewarm pace. The most recent PMI figures from the Chinese government and the Caixin SP Global will be released on Tuesday, providing fresh insights into the state of China's economic recovery. To encapsulate, recent data signals a dynamic global economic environment. The U.S. job market defies predictions with steadfast growth, while the Eurozone treads a fine line with modest economic expansion amidst stable inflation. China's service sector propels its economic comeback, yet the manufacturing recovery remains hesitant. These insights set the stage for a vigilant watch on forthcoming economic indicators. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.